Fascinating story. So Andrew Lutfi says that this IPO is part of his succession plan.
Exactly. It was not clear in the prospectus why he was going public. So we kind of wondered, why are you going public? It was the largest IPO this year. He raised as much as $300 million, but only sold 13% of his business. So he explained, he's 60-year-old now, and he explained that it all started at the end of 2018, when he had a come to Jesus moment and he realized, wait, I don't have internal succession nor children willing to take over. So he started planning on what's next. So he created a formal board. He hired McKinsey & Company to change the mindset of employees from compliance and audit to growth and goals. And then the COVID pandemic hit. So that was a setback. So they need to restructure the leases there. But after that, they improved the business significantly. And over the past few years, they have a CAGR of 15%. Revenues on a 12-month trailing basis as of August were at close to $900 million, profits $133 million. So the business was doing pretty well, is still doing pretty well. They want to expand, but not like crazy. They have 200 stores right now in the US and Canada. They want to add 50 over the next 5 years, few in the UK. So it's really about succession planning here. And yeah, over time, maybe he wants to sell some shares. He said that he's considering to own about 10% of the company in 2035. But he did not need money, and he has significant investments in real estate with private equities. He owned 80% of a mega luxury mall here in Montreal. He owns at 100% the Four Seasons Hotel here. So he didn't need money, and he doesn't even know what he's going to do with the gross proceeds of the IPO.
He said that he says that he talked to private equity on a potential buyout, but didn't seem to be a good fit.
Yeah, exactly. For $200 million, why not partner up with a private equity? But he said that private equity firms like buying broken assets, adding value, and then exiting 3 to 5 years later at a profit. So that's what he said about that. Yes, he had some talks with them, but the fit was just not right. And going public became pretty much the only option to create a good shareholder base that would align with his vision and what he wants to do with the business.
So we've got the stock trading at around $21 today, which is pretty well, the IPO price on November 21st. So a 1 month shows the stock up marginally.
Yeah, well, not too much excitement right now for the company. There is going to be some earnings, third quarter earnings on December 17. There's still a green shoe option there where underwriters could buy as much as 15% of more shares, but the demand may not be there. So we'll see the next coming weeks if something happens. But right now, it's more a let's wait and see what happens with Dynamite. I think we need to better understand this business. It's not so well known for now, but Lutfi is a big name here in Montreal. The company is a big brand here in Montreal, and maybe over time in Canada, people will learn more about the company.
Thank you very much, Mathieu. That's Mathieu.